Well, hello and welcome to today's webinar. I'm Mike Swanson speaking to you live from Nashville, Tennessee. And today's webinar is looking at the difference between charging interest on case expenses and passing interest through from a third party. So a couple brief introductions. This is me. I'm the president and CEO of Advocate Capital. I'm also the author of How David Beats Goliath, the only finance book ever written to help plaintiff lawyers. And joining me today is our special guest. Tim McKey is co-founder of Vista consulting team. He is a CPA and he has experience working with firms all around the country. And here's Tim. Hi, Tim.
Hello, good afternoon. How are you?
Fantastic. How are things in Baton Rouge?
Great. Hot.
Yeah, it's that time of year again. It's getting muggy here too, like it rains every day for an hour, just to keep the humidity up.
You're right.
Well,
thanks for having me today.
Sure. Thanks for joining us. So a couple housekeeping items. First is a disclaimer. So this webinar has been prepared for informational purposes only. It's not intended to provide specific tax, legal, or accounting advice. You should consult with your independent accounting, tax, or legal expert, whether you're determining to take action based upon what you see today or not take action. Get experts involved, get the right lawyers and accountants involved. Also, full disclosure, so I am the president and CEO of Advocate Capital, and we are purveyors of the AdvoChat Case Expense Funding Service. This webinar is brought to you by Advocate Capital. In fact, I'm speaking to you from my office here at Advocate in Nashville, Tennessee. So there's maybe a conflict here, right? Because we essentially outsource the case expense tracking and funding for law firms around the country, about 500 law firms. Today, we're going to talk about some of the risks for that. So I wanted to be sure I'm disclosing that. I have an opinion, I'll express that, but I also wanted to bring an accounting expert like Tim in to add some color for this. And Tim is unpaid, he's a friend, but an expert, and he works with law firms around the country. So first, why are we doing this webinar? Well, we're doing this because over the past 20 years, we've talked to a lot of law firms who became clients eventually, because when they evaluated what they were doing, what they thought they were doing, I should say, and calculating their own interest and passing it through to cases, they discovered there were a lot of risks, and many of them ended up becoming clients because of that. And we also see firms around the country who, in our opinion, are not complying with ethics opinions. So we thought we would provide this content today in an attempt to help with that. So a couple of definitions. First, what is meant by passing through interest in this webinar? So what we're talking about here is passing through interest like any other case expense, whether it's an expert witness, might be a deposition fee, things like that. So it's someone borrowing from a third party, taking a receipt for what they've paid that lender and passing that interest through the case as if it was any other case expense. And really the ethics opinions around the country are consistent on this. There is no published ethics opinion that we're aware of that says you can't do that. And a lot of states, I think 31 or 32, expressly permit that via ethics opinions. So what is meant by charging interest? So in purposes of this webinar, it's everything else. Many firms have a bank line of credit, for example, and they say, oh, I'm going to track the interest myself that I'm paying the bank and pass it through. Well, I think if you think about the nuance there, by definition, they're not really passing interest through. They're tracking it to the best extent they can, more or less in parallel with the bank, but they're not taking that interest receipt and passing it through. They're doing their own independent calculation. So wanted to make those two distinctions. Tim, do you want to add to any of that?
No, I think what Mike said is absolutely right. It can get fairly complicated to track that interest on your own. And my understanding and our interpretation in most cases is that that interest has to be tracked on a case-by-case basis. I don't know if I'm getting ahead of what you were going to talk about, but that can be a little bit complicated. It can be done, but it's complicated.
Yeah, great. Well, we'll get to the logistics challenges in a moment, but first I want to talk about some of the risks. So the first risk I'd like to highlight is state ethics risks. As we all know, every state's different around the country, and every state has its own ethics panel or Supreme Court that opines on various activities that law firms are allowed to do and not allowed to do. So the first thing to talk about would be to talk to your ethics lawyer and make sure that your state permits you to charge interest on for case expenses, right? Are you permitted to do that? Some states do that and some states don't. So that's the first hurdle to get over, because even though you're trying to match the rate that you're paying the bank, what you're doing is you're charging interest for your client in parallel to the bank, but you're calculating and charging interest to them. So it's important to look at that. Tim, have you had experience with states where you're not permitted to?
I haven't run into any that says you're absolutely not permitted to. In most cases, it's a disclosure issue in the agreement, the contract, if you will, with your client.
Right.
What we've seen, some states, and I'm not obviously familiar with every state, but say that, hey, you have to specifically delineate if you're going to pass through interest. Some states just say, just assume that that is a case cost, as you said earlier, just like any other case cost. We tend to, when advising our clients, advise them to err on the side of over disclosure, if you will, that we may, if we borrow money on your behalf, it would be passed through. And we like to see that lined out in the contract or in the retainer agreement.
Yeah, absolutely. You know, I have looked at quite a few of the ethics opinions around the country about passing through third-party interest, and they vary a lot. I mean, some states don't say anything about disclosure. Some are very, very specific about what to disclose. So it is important to make sure you have copies of all relevant ethics opinions. And I would get a lawyer, an ethics lawyer, to bless whatever it is you're doing, whether it's pass through or calculation.
Absolutely. Actually, Mike, we know a one state that says you know, even if you're passing through, it can't be in excess of a certain amount, so a certain interest rate amount. So
Yeah.
you know, the rules, ethics, and it's kind of funny to me that ethics are different in states, but ethics are ethics. But obviously, they're particular state by state. Some of them just say, hey, you can mirror whatever, and others say it cannot be in excess. So again, there's nuances, and I agree with you 100%. Get an ethics opinion on this. Talk to your ethics lawyer.
Yeah, so like in Louisiana, in your state, interest is capped at prime plus 10, I believe, as of January.
10. Yeah, that was the state I was referring to, my home state.
I figured, yeah, sounds good. So next type of risk I think is out there for law firms that are trying to do this is if you're charging interest, are you now a consumer lender? And do you have to comply with the consumer lending laws in your state? There are states that require that. If I'm not mistaken, Colorado is one of them that says if you're going to calculate or charge interest to a client, you now have to comply with disclosure requirements for consumer lending and things like that. So are you permitted to make loans? And then if you are, what additional regulatory risk do you have and do you need to comply with in your state? Any experience on that, Tim? Have you bumped into that?
Only bumped into it in Colorado. And again, I consider more of a disclosure issue, but absolutely you have to comply with, and I don't remember the actual name of the regulatory agency, Office of Fiscal Responsibility or something like that in that state.
Yeah, got it. Okay, great. Next is taxable income. So if you're charging interest parallel to what your bank's charging you, that's no longer an expense you're passing through. You're actually calculating and charging interest. And it's important to let your CPA know that. In my opinion, I'm not a CPA, Tim might disagree with me, is that should be taxable income on your tax returns. Tim, do you have an opinion?
Absolutely is, and should go on a separate line item on the interest line on the tax return.
Right, absolutely. So that's another compliance issue to think about. I think the most difficult part about trying to do this right, so to speak, are all the logistical challenges. And I'm really familiar with them because having run Advocate for 20 years, I know all the nuances. Right now we're tracking about 65,000 cases 24/7 for almost 500 law firms, and I know how much detail goes into that on a daily basis. So I'm going to talk a little bit about a few of these logistical challenges. So one of the challenges, really, one of the biggest ones is timing. And theoretically, if you're going to calculate interest exactly parallel to the bank interest you're paying, there's some important timing issues to think about. So when do you start charging interest on an expense? Right, that's the first thing to think about. And some law firms use case management software that they say tracks the interest expense. Well, some of those softwares start charging interest on the day that the dollars are logged into the case management software. That's not necessarily the day that the law firm started incurring interest expense, right? Because they may enter it. It's a bill that's now on the accounts payable, but they haven't paid it yet. They haven't borrowed against it. So there's a challenge there. If you're going to use your case expense software to track interest, you're really charging interest, and are you going to do it exactly to the day at which you make a draw from the bank, right? Because that's the key. Your interest starts calculating the day you make a draw from the bank. Is that the day you start calculating interest for your client? So that's a timing challenge. Does that make sense, Tim?
Absolutely, absolutely. It's tricky.
Yeah, and so another challenge is if you receive, let's say, a partial payment back on expenses. Like say you settle part of the case, and those expense monies come back to you. The case might still be open, or maybe it's a vendor who sent you a refund check or a voided check or what have you. In those cases, right, there's another timing challenge. Are you taking those funds and immediately paying the bank line down, and on that same day, are you reducing the principal owed to you from your client? So there's a potential mismatch timing there. And another one is daily interest calculation. Most likely, if you read your loan document from your line of credit from your bank, there will be a definition of how interest is going to be charged. Most of the time, it's going to be a daily rate. Actually, they're going to take your annual rate and divide that by either 360 or 365, and then calculate your rate on a daily basis. So if your bank's doing it that way, that's the way you'd have to do it, exactly to the penny. Not only the timing of when you start charging interest, but also the method that you use. Are you using a 360-day year or 365, and are you tracking it daily? Because as the next slide indicates, there are interest rates that change, right? And that's been happening. The Fed increased the prime rate from 2015 to 18. It went up for 3 years. And when did your rate increase at your bank? When did the bank start charging you a higher rate when prime went up, right? Does that reset daily with your bank, or weekly, or monthly? And how are you doing it with your clients? If interest rates go up or they go down, when are you changing the rate on the daily basis that you're charging your clients? So as you can see, it can get pretty tricky, and you really have to have a lot of details with that. So Tim, what do you think? Are they going to cut rates again?
I don't know. I actually was just talking to someone in my office that mortgage rates fell a little bit actually today. So I was curious about that. I don't know. We really don't necessarily keep up with that, but what we do know is that the banks tend to change rates on lines of credit either monthly, usually monthly, or I'm sorry, daily, weekly, or monthly. And if you've got a changing interest rate, it does add a complication to be the exact mirror, if you will, of passing through any rate. So again, a little bit of complication.
Yeah, and it's not just when does the Fed increase the rate, it's when do you start experiencing increasing in the rate, which you would then, I guess, justify the increase to your client. Theoretically, if you're tracking interest from your line of credit, theoretically, and in practice, you should get your bank invoice every month and compare it to the total interest you calculated on all your clients, and those two numbers should match to the penny. If they don't match to the penny, you've done something wrong. And I would challenge you to balance it to the penny, just having done this for that long, if you have more than 3 cases. So, another challenge with tracking interest is documentation. So when you sit down with your client at the end of a case, you're not going to have a third-party receipt like you would. Here's a receipt for what I paid my expert witness. Here's a receipt for my travel. You're going to have an internal spreadsheet that says, hey, Susie in the back room says, here's the interest you owe us. So you're not going to have third-party documentation, and you could get challenged on that. Tim, the people who are calculating their own interest, do you see them producing documentation?
I do. They do. The ones that we work with, we certainly advise them to do that. And yes, it's an internally generated document, but if they're going to do it, they've got to provide as much detail as possible. When was the money borrowed? When did they pay for whatever they paid for? When did interest rates change, et cetera? So it's a fairly detailed document.
Right, and if you have a volume practice.
I'm not saying every one of them does it either. I'm saying that that's what we advise.
Yeah, absolutely. Let's talk about staffing a little bit. And Tim, I know this is an area that you spend a lot of time with law firms in terms of efficiency, coaching, hiring, staffing, and allocating resources inside the law firm. There are some questions to ask yourself if your law firm is doing this that I would ask. And the first is the person who's doing this calculation properly trained? Did you just give the receptionist an Excel spreadsheet and tell them to figure it out? Or is this a trained financial person who really knows all the nuances of how this should be done in order to not get your law firm in trouble? And Tim, your experience in plaintiff law firms, how consistently are they having the right people in the right places? I guess maybe the law firms you work with are consistent on that, but have you ever seen, promoting the receptionist to CFO, that kind of thing?
Not to that extent, but actually, yes, sometimes there are training issues. And the issue with staffing sometimes is just the size of the organization. If it's a fairly large organization that has 3, 4, 5 people in their accounting department doing different things, quite honestly, it's a little bit easier to train and get someone to do this because you have a narrow focus. If it's a relatively small firm where that accountant or bookkeeper in a lot of instances is wearing many, many hats, this is just one more hat. And I propose to you, it's a very important hat. It's one that, in this area, not getting it right and being challenged, not necessarily by a client, but by the bar association, is really a little bit frightening. This is something that we never ever advise our clients, obviously, to do anything that's ethically incorrect. Sometimes ethically incorrect is on accident, and
most of the time, I would say.
Yeah, I would say most of the time that is true. So this is something you don't want to, my technical term, you don't want to monkey around with this. You either got to get it right or you get it to a third party, and that becomes then a cost benefit analysis, just like anything else. Maybe a little off track here, but we see that a lot with internal controls within an organization. Do we hire another staff person just to make sure we get appropriate segregation of duties, or do we try to put some procedures in place to make sure that we have adequate internal control? That is almost the same thing in regard to cost benefit, but I propose to you that not having good internal controls, could it lead to a problem of someone misappropriating money? Yes, but you're not going to lose your law license over it. So, again, we are always looking at where's the important areas to make sure that you get it right. And quite honestly, this is one of them. And Mike didn't pay me to say that. That's truly what we believe.
Yeah, I think you're right. We'll get into a little bit more of what if you get it wrong type of things. A couple other points on staffing. If it is a really small office, as Tim was saying, if you have an accounting department of 7 people, great, there's going to be a lot of cross training on all areas. But if it's a one-person bookkeeper, let's say, for example, what if they call in sick? Who's doing the interest calculation that day? Because you're going to have expenses that day. You're going to have settlements that day, and who's going to take care of that? Do you have a detailed written procedure to address all the logistical challenges that we talk about? Is that laid out, and has somebody audited that, a third party, to say, yeah, that complies? Maybe even getting your ethics lawyer to say, I could get behind what you're doing, those procedures look good to me. And then what if you have turnover in that position? If it's a one-person shop doing all the interest calculation, what if that person wins the lottery and doesn't come back to work tomorrow? What happens to your situation then? And then how much time are they spending, right, Tim? So if this is a big firm and they have, let's say, 1,000 cases, how much time is somebody spending on all this interest calculation? And could they either reduce staffing or have that person doing something that actually, helps make the firm additional money? So,
cost benefit,
Yeah, cost benefit, exactly. Well, let's talk a little bit more about what if you get it wrong. So, Tim, I think you're familiar with Chittenden v. State Farm. To my knowledge, it's the only case law on interest pass-through or interest calculation that I'm aware of. And viewers, if you'd like a copy of Chittenden v. State Farm, it's our Louisiana Supreme Court. There's a theme here today, I guess. Louisiana's the theme. So in Chittenden v. State Farm, I mean, essentially, the case was not really about interest calculation or pass-through, but what the judge said was he observed that the lawyer was kind of sprinkling some interest from his line of credit over his cases and not doing it carefully or precisely, and he's kind of slapped his hand and said, wait, you can't do that because you're going to be charging some clients more interest than you should and other clients less interest, and you're not treating them appropriately. So if you want a copy of that. There's also some IRS risk, I think, if you're not booking that as income. Is that right, Tim? They're not
Correct.
booking that income.
The income that you're collecting, the interest you're collecting is obviously income. Now, theoretically, you have an offsetting expense, but you don't get to net those. On the tax returns, they should be shown as two separate line items, if you will.
Yeah, that's
and
a good
going
point.
back to Chittenden, that particular attorney was simply being very haphazard in how he was doing things, and we would never advise that.
Yeah, absolutely. Well, that's a good point though, Tim, because I think a lot of lawyers that I see, they say, well, the interest nets itself out. So, I don't, the interest I'm paying gets netted out of what I'm collecting and whatever, so I don't need to report either of those. But that's not right.
No, it's not correct. It should be shown in separate places. But once again, yes, there's IRS risk, but again, that can cost you money. The other risk we're talking about can cost you your license. Get it right.
Yeah.
I'm not saying that one of these is less than the other, but everything needs to be calculated correctly, and certainly reported correctly to the IRS too.
Right. So the one other one I didn't mention, I mentioned earlier, is consumer lending risk. Are you running afoul of consumer lending regulations in your state? You need to be careful about that. So you might wonder, why would a firm bother to do all this on their own? And I think it's because of plaintiff lawyers having a good heart and they want to help people. That's why they're in this business. They're in it not to get rich, but to make a difference in the world, to be the keys to the courtroom for their clients, to give life to the Seventh Amendment, and to defend individuals who are up against usually insurance companies to get a fair shake. And they look at it and say, well, I'm going to borrow for the case expenses, and if I outsource that, I'm going to pay a little more because someone else is going to be doing the tracking part of it. So I'll just take it in-house. My bank line is cheaper than the case expense funder. I'll track it myself and save my client some money, because it doesn't really save the law firm money. The cost of the borrowing goes through the case anyway. So they're trying to help their plaintiffs out, which is an admirable thing to do. Now they're doing it though at their own expense in terms of staffing and risk. So that's, again, cost benefit analysis. What's I would say, is it really worth it? I have an opinion on this, right? I'm the CEO of Advocate. Many of our clients looked at it and determined it really wasn't worth it. So if you are thinking about hiring a case expense lender, get in touch with me. We think an educated consumer is the best consumer, and we have a couple of tools you can use. One is questions to ask a case expense lender, and then actually a due diligence checklist you can use, because you're not an expert in this area, so we've put this together. So if you're evaluating any case expense lender, you can use these tools to kind of side by side compare them all, ask them the right questions, and make a determination, right?
Yeah, absolutely. I think certainly this is something that I would say most firms should consider, which is financing their case cost. There's lots of reasons why, one of which, if you're in a profitable and growing firm, you can be very profitable and not have any real green dollars if you're turning right around and investing your own money into cases. So one of the things we didn't cover earlier is kind of the reason why this should even be considered. And that is this cash flow situation that, again, if you're a growing firm, you're investing in cases, and you're looking at your financial statement and say, how can we be profitable, assuming you're accounting for these properly by showing them as an asset on your balance sheet, which is another a topic for another webinar. If you're doing this correctly, you can be very profitable, but not have any real green dollars because you're taking the profit and investing it in cases.
Right.
We certainly like to look at firms, and we're not trying to put anyone in debt per se, but if there is good debt versus bad debt, this can be considered good debt because it helps you out in so many ways. And if you're going to do it yourself, you do absolutely have to be nitpicky about it and get it right, or you sub it out. Cost benefit analysis, and I know Mike, I've known him for a long time, and they do a great job with this.
That's very kind of you, Tim. Thank you. Well, hey, we're going to open it up for For questions or comments in your dialog box for GoToWebinar, you'll have an ability to type questions in, and we will keep it anonymous. We won't mention your name. If you want to ask a question, you can. Let me give our viewers a chance to enter a question or two. In the meantime, Tim, what's happening with Vista upcoming? You have any events coming up, or what's going on?
We do. I don't know if you guys had a chance. We sent a slide earlier, and it was so late. I don't know if we had a chance to get in, but we have some schools coming up. Gosh, and I need to double check the dates. I've got it here in November. November 6th, 7th, and 8th in your fair city. We're going to have a set of schools, a day on intake, a day on case management, and a day on leadership and human resources on the 6th, 7th, and 8th of November.
Well, be sure to, we'll get that slide from you, Tim, and we'll post that. We'll blog about that so our viewers can see that for sure. Okay, here's a question or two. See if I can work this. I'm not, here we go. Can you charge interest on costs that the firm has paid on behalf of the client? I'm happy to take that. Well, it's going to be a qualified answer, right? So first, I don't know what state you're in, so it depends. You can, in every state that has an opinion, it's always been positive that if you pay interest to a third-party lender, so now you have a receipt, here's what I paid my lender for interest, that's permissible as a reimbursable case expense in every state that's had an opinion on it. Now, can you charge interest, right? And this is a good question because it highlights the difference. Are you charging them interest, or are you just passing through third-party interest? If you're already paying a third party and you have a receipt for that, in every state that I'm familiar with, that's permitted at the ethics opinions. But can you charge them where you're actually making the interest off of them? That's a state-by-state rule, and you should check with your ethics counsel in your state. And if you want to follow up on that, the person who asked that, I'm happy to allow you to do that. Let's see if we have others.
Yeah, and Mike, I'll chime in here. I know that Texas, I had a client in Texas that got an independent ethics opinion that they could charge interest. That's the only state that I've actually ever heard of that. I'm not saying it is the only one. It's the only one I've ever seen a written document. And again, that was not something to be relied on by every attorney. It was specific to that particular attorney. So if you're considering that and you happen to be in Texas, I would still advise you to get a written ethics opinion about that. So,
yeah, there are. One of the things we track is the attorney's ability to make kind of a personal loan to the person, like for living expenses, and that's limited as well. There's 7 or 8 states where the law firm's allowed to make a loan like for living expenses, and some states allow you to charge interest on that, and some states do not. And that viewer was speaking to us from Florida. Thank you for clarifying where you're at. I'm sorry, but my answer has to be the same, which is check with local counsel, ethics counsel, and make sure you're communicating with your lawyer properly. Are you passing through interest you paid on another lender? Or are you just going to calculate interest and charge interest to the client? Because those are 2 different scenarios.
Okay, right. I want to throw one other thing in there, Michael, that I actually did read in something from an ethics attorney that indicated in that particular state, and I think it was it may have been Pennsylvania, that if you were charging interest, it was considered being in business with your client, which in that particular state was unethical. So again, this is a very nuanced area. And again, I know we're talking a lot around this, but we're trying to communicate, to the attendees today that it's possible. It's something that you should do. You've got to be very careful and get it right, both ethically and the calculations. So.
Got it. Absolutely. Thank you, Tim. Okay. What is Advocate Capital's interest rate? Okay. Well, we're not going to turn this into a sales pitch for Advocate. Thank you for that. Go to advocatecapital.com. A chat box will come up, or click on Find Your Rep, and you can let us know what state you're in, and we'll have our specialist from that state get in touch with you to give you that information. If you would like a copy of any of the documents we talked about today, just message me. You can go to advocatecapital.com, click on my page, and send me a message here. Be happy to share with you any of the documents that we talked about. Tim, is there anything you'd like to add?
No, other than just thanking you for allowing me to participate. And again, hopefully that some of you guys will consider our schools in November. We'd love to have you there. But Mike, good job. And again, we often advise take a look at financing your case cost as a way to manage your cash flow. I think it's a good thing to consider.
If you have questions for Tim or want to consider hiring Tim to work on your practice with you, his contact information is on the screen now. We'll put that in the text below this when we produce the video. You will receive a link to the video of this presentation if you want to share it with your legal or financial advisors. Here's my contact information as well. Always happy to answer questions for you. Next month, we are going to have a webinar in July called, it's going to be on behalf of the Law Practice Channel. It's going to be on law firm marketing, and our special guests will be Bob and Brad Simon from the Simon Law Group in Los Angeles, California. If you know Bob and Brad, they're awesome trial lawyers. They're a lot of fun. Should be a really fun webinar, and they're super great at all things I don't know about, like Instagram and all that kind of stuff. So they'll help us learn about that. I'm also appearing on their webinar about a week later from AAJ, live from AAJ. We're going to apparently be broadcasting the webinar from an Airstream camper on the floor of the exhibit hall. So it should be a lot of fun. So stay tuned for that next month's webinar, and also for the podcast with the Simon brothers. So thanks so much for joining with today, and we look forward to serving you.